Hey, it's your favorite local broker, Eren Millam with Premier Property Group. Today, we're going to be reviewing a video from Graham Stephan regarding the reverse housing crash of 2024. Let's take a look.
Of course, the downside to all of this is that it seems as though regardless of who you ask, there's almost a unanimous agreement that home prices are not likely to meaningfully fall, at least until home sellers outnumber buyers, which at this point is unlikely to happen anytime soon. Essentially, what we're seeing right now is an almost perfect equilibrium of supply and demand, because there is very low supply, but also very low demand. So prices really don't have anywhere to go but sideways.
Okay, that is the clearest explanation that I've ever heard someone say about the current market, when other than myself, of course. And that is the inventory is so low. That is the crux of the issue right now for these high prices. And there does not appear to be any indicators saying that that inventory is going to go up. Therefore, prices are going to hold or increase. This is what I have been screaming from the offices, from the top of my office.
For instance, the chief economist at Realtor.com believes that home prices don't really have much room to go any higher because buyers are already maxed out in terms of what they can afford. So why does Redfin then believe that the housing market's hit a rock bottom? Well, to answer that, keep in mind that 2023 has been a fairly bad year for the real estate market. Like, we all know that prices didn't crash into oblivion, but inventory is at a historic all-time low, mortgage rates hit a multi-decade high, and affordability is near the worst it's ever been.
All of those things are true. All of those things are contributing to the market we're in. That is what the data is saying. That is not what my feelings are saying. That's not how I feel about the market. It's not because I'm trying to get people to buy. I'm trying to give you the data to make the best decision for yourself. Now, whether you choose to buy or not with that data, that is totally up to you. But just recognize that there are consequences for your decisions. And I'm a big believer in real estate in general for building your wealth. So I follow the data. So just keep that in mind. Yes, I sell real estate, but I'm not trying to sell you real estate. If you don't want it, that's fine. I just believe in it. This is what the data is saying. The market's going to go up in terms of price. So it'd be better to buy now than later. And if interest rates go down, you can refinance, right? So it's not so much whether it's a good time to buy or sell. It's if you're being intelligent about how you are procuring real estate, there is never a bad time to sell. It's always a good time if you're being intelligent. All right, let's see what else he has to say.
Biggest differentiator in this market is that the homeowners who are selling are often required or forced to sell because of job changes, lifestyle changes, divorce, or marriage, unlike 2008, where sellers faced foreclosure risk and a race to the bottom. This suggests that prices have very little room to fall because those sellers can afford to make their mortgage payments and be patient until eventually they get the price that they want. But basically, in this case, home sales have hit their rock bottom because it can't possibly get any more gridlock than it currently is. Sellers don't want to give up their historically low mortgage rates, and buyers just can't keep paying higher and higher and higher indefinitely.
So this is a great point. The market has hit a rock bottom in terms of closed transactions, but in terms of price, it's still going to be forced upward due to the supply and demand issue. Okay, let's keep watching.
I mean, at this point, it's said that in order for affordability to return back to its previous levels, one of three things has to happen. Either the 30-year mortgage rate needs to fall by 4.4 percentage points, the median household income needs to rise by 62%, or home prices need to fall by 38%. However, despite all of that, it's also said that of the home sales in October, 28% went above the listing price, which suggests that there was still a bidding war among would-be buyers.
So of those three things, I want you to comment down below which one do you think is the most likely to happen. Either income going up 62%, prices dropping 38%, or the interest rate dropping 4.4%. Now, in my personal opinion, it's going to be the interest rate, because even in the largest, take 2008, for example, in the crash for us in Lewis County, the market lost 25% of value. Okay, so as huge as that was, it only lost a quarter. So for it to lose 38%, that means it has to be bigger than '08. I don't see that happening. The factors aren't the same. In fact, the situation in 2008, all of those leading factors, which ones are happening now? None of them. Totally unrelated. So I also don't think income is going to go up 62%, although that would be awesome for everyone.
Anyway, with that now out of the way, we gotta gotta answer the question now, which is statistically, what is most likely to happen throughout the housing market in 2024? Well, according to the data, here's what we do know. Investors overwhelmingly believe that the Federal Reserve will begin lowering interest rates in mid-2024. Or if you want more precise information, there is a 52% chance that we'll see a quarter-point reduction by May of 2024, along with 4 more rate cuts throughout the end of the year. We also know that investors and institutions have a record $5.7 trillion parked in cash-like money market funds, many of which are yielding above 5%, potentially serving as a massive catalyst when that money eventually enters the markets or real estate.
So that's another indicator that I've talked about is right now the demand is low because of high interest rates. But if those interest rates go back down, then demand is going to surge. But inventory is not going to change, at least not by much. Maybe it goes up, but it needs to increase by 200% in order to reach that demand level. So prices are still going to be pushing upward, especially if investors, because right now a lot of investors are kind of on the sidelines, like he just said. But if they get in and bring in all their assets, watch for prices to continue to go up.
I'll call it for what it is. I can't see many situations right now where buying makes sense in the short term. The fact is, renting right now is cheaper throughout almost every single market in the country. Really good deals are very difficult to come by, and I'm just not seeing that much opportunity right now in the market. That's why I'm taking the approach that if I'm looking for a place to move in the next 2 to 5 years, I'm most likely going to rent a place instead, at least until the cost of buying versus renting evens out. I'm also constantly looking for good deals or potential investments, but I've seen nothing that really makes sense given the risk of the market.
So 2 things about what he said. Obviously, there aren't good deals. And again, if you're going to buy and move again 2 years, it probably doesn't make sense to purchase right now. Although it depends on what kind of deal you get. Now, for investing, you obviously need to get a really good deal in order for it to make sense. But that's true in really good markets. That's true in really bad markets. It's just that right now prices are so inflated. If you're not able to get a good price up front, the chances of you succeeding in your investment are going to be small. So for the investment property that I bought, I did a very non-risky purchase in that I bought the home for $1,000, and at the end of everything, I'm going to split the proceeds after I've been paid back my expenses 50-50 with the seller. So that's what it takes to get a deal and to do a deal intelligently. And like I said, it doesn't matter if it's a good market or a bad market. If you can get these alternative types of financing deals rather than your standard structural ones, there's still opportunity out there. So he's saying there's no opportunity. He's probably used to just paying a bunch of cash for his homes, not creating relationships and structuring deals in a way that works for everyone. Keep watching.
Personally, I tend to think that a lot of these real estate predictions are just random guesses, and inevitably, a few of them are going to be right. But if you're going to ask me for my guess on what I think is going to happen, for whatever that's worth, I tend to believe that interest rates are going to stay higher than most people think. I think they're going to stay higher for longer than most people think. And over the next few years, the housing market should begin to normalize, but it might be a very slow process.
So on one hand, I agree with him. On the other hand, I also know that 2024 is an election year, and I know that politicians like to do things that make it seem like they're doing good things. So do I think that the politicians are going to let the economy keep going this way in 2024? No, I don't. I think they are going to force the Fed to reduce interest rates to make it look like the economy is roaring back. Because if they don't do that, when it comes election time, they're going to have this economy hanging over their heads, which is usually the number one indicator for success. Now, I'm not saying they won't try to spin it, but it's going to be really hard to spin it when everyone is feeling the pinch of this economy. So that's the end of what I'm going to be reviewing for that video. The actual video is about twice as long. I just kind of snipped it up to find the more interesting parts that I could respond to and that actually gave you information. I'll link the video down below so you can watch the whole thing if you'd like to. And if this video was helpful to you, if you got information you felt was useful, please consider giving it a like, a thumbs up, and consider subscribing to my channel so you don't miss any need to know information about our current market. Now, also, I need to get some likes and some subscribes and some comments down below for wearing this amazing jacket, right? Come on now. Again, my name is Eren Millam with Premier Property Group. And remember, never settle for less than extraordinary.